Hey, welcome back. It's Jason Walter here. The housing market in the San Francisco Bay Area is cooling off more rapidly there than anywhere else in the country. This is according to a newer article from Redfin that was just published 2 days ago at the time of this video. Also, in this article here, they state the top 10 cities that are cooling off the most across the country, and one of those is actually in Sacramento, California, where I live and work as a real estate agent. They also state the top 10 cities that are cooling off the slowest across the country as well. So with that said, let's go ahead and dive right into the video. And of course, if you guys get any value out of today's video, please hit the like button. I greatly appreciate that. Also consider subscribing as well. I post the latest housing market trends so you guys can make a more informed decision about where you should buy or sell a house. So with that said, let's go ahead and dive right in. Again, it says the Bay Area, the San Francisco Bay Area, that housing market is cooling more rapidly than anywhere else in the country. And this is a report that was published on July 8th. So San Jose, California, Oakland, and San Francisco are among the fastest cooling housing markets in the United States right now. And it says here, housing markets in Northern California are cooling faster than anywhere else in the United States amid high mortgage rates and a faltering stock market. And by the way, stay tuned here in just a little bit because I'm sharing the latest trends regarding the Bay Area housing market, but also in Sacramento as well. A lot of you recently commented saying you want to see a housing market update for Sacramento, so I'm going to give you that information here in just a little bit. So Redfin's report here says that 5 out of the 10 housing markets that have cooled the fastest this year are in Northern California. Those are San Jose, Oakland, San Francisco, Sacramento, and Stockton. Stockton, by the way, is about 45 minutes south of Sacramento. Interesting enough, out of these 10 housing markets that are cooling the fastest, I'm going to be actually sharing those here in just a little bit. All 10 are actually located in the West. And it says here this cool down was mainly due to mortgage rates practically doubling since the start of this year. Mortgage rates were around 3.3% as of January 1st. They spiked to over 6% in May. And now they're approximately 5.85%. This cool down in these housing markets here is not just from spiking mortgage rates, because it's also due to a declining stock market. So here's the latest trends we have regarding the stock market, because a lot of these markets here are impacted by fluctuations in the stock market because a lot of people use stock options and stocks in order to use for a down payment to buy houses here. So at the time of this video, the Dow Jones Industrial Average is actually down almost 14% year to date. The S&P 500 is down approximately 18%. The S&P 500 is down 18% this year so far. And also the NASDAQ has tanked 26% from January 1st. And a real estate agent who's based in San Francisco stated the following: the housing market has changed drastically in the last month. In the early spring, every home was selling for over the asking price with multiple bids. Then the number of people attending open houses dropped from about 20 to 2. And now some houses are sitting on the market for over a month and selling for under their asking price. Supply is starting to pile up. This is pretty eye-opening because in the San Francisco area, for whatever reason, houses get listed for far less than they think the house is going to sell for. So if a house is going to be selling for about $2 million, it would be not uncommon for a real estate agent or a home seller to list their house for $1.5 million, knowing their house is going to be selling for over $500,000 more than asking price. So it's pretty astonishing that they're saying that houses are selling for less than asking price in San Francisco right now. Okay, let's talk a little bit more about this top 10 cities that are cooling the fastest. Then I'm going to be sharing the top 10 cities that are cooling the slowest. So here's what Redfin did in their analysis here. They actually looked at housing market data from February 2022 to May in the 100 most populous US cities. And according to Redfin, San Jose, California, which is approximately an hour south of San Francisco, is cooling at the fastest clip across the nation here. This, of course, measures home buying demand and competition dropping off quicker than any other metro this year. So San Jose, California is cooling off the most across the nation right now, which is pretty astonishing because that's been one of the most strong housing markets we've seen over the past couple of years. But I actually want to share the latest trends here in San Jose. Then I'm going to be sharing trends regarding Sacramento as well. So here's a San Jose market right now. Have a look at this. So the orange line right here is for 2021. The blue line here is 2019. And the black line is for 2022, this year. I'm excluding 2020 because that housing market year was completely abnormal. So right now for the 4 weeks ending June 26th of this year, the number of new listings is actually down almost 15% compared to 2021. This is interesting to see because we're seeing a pullback in the number of homeowners listing their house for sale, at least compared to 2021. So down 14.7% from a year ago. But let's have a look at active listings, which of course is housing supply. So take a look at this. Active listings, which is another word for housing supply. The total number of houses for sale right now in San Jose is actually up almost 6% compared to 2021. So they have more houses listed for sale right now compared to the same week in 2021. Still have far less compared to 2019 when we had approximately 3,245 houses for sale. Now they have approximately 2,200. So we're seeing a decrease of new listings, yet an increase of active listings. So in other words, we should be seeing a pullback in home buying demand because active listings are increasing, but that's not coming from new listings hitting the market. Therefore, let's have a look at pending home sales, and that's when a home seller accepts an offer from a home buyer. So pending home sales are down almost 38% compared to a year ago, and actually are down compared to 2019 as well. So a big pullback in contracts signed really ever since April this year, which coincidentally in April, the average 30-year fix hit approximately 5% for the first time since 2011. So potentially because of that, they're seeing a big decrease in contracts signed, and now they have fewer contracts signed now compared to 2019, which is obviously pre-COVID. So it's quite astonishing that they have more houses for sale right now, yet pending home sales have been declining. Big time too. Look at that, down 38%, which is pretty crazy. Let's also look at price drops because I imagine those are gonna be through the roof as well. Wow, look at that. So price drops are at 7.9%. That's a percent of active listings with price reductions right now in San Jose. Compare that to 2019, we had approximately 5.9%. Also last year at this time, it was only 2.9%. So basically in 1 year, they went from 2.9% all the way up to 7.9% for the share of price drops right now. I'm guessing part of the reason regarding why they're seeing a huge amount of price reductions, of course, is due to home buying demand decreasing, but also because of overzealous sellers. So the percent change in the asking price for houses listed for sale right now in San Jose is up 14.5%. But compare that to January 1st of this year, they only increased by 4.78%. So in San Jose, they're seeing a huge increase of listing prices, up 14.55%. And that could be one reason why they're seeing a huge increase of price reductions right now. And meanwhile, home sold prices have been declining in San Jose, believe it or not. So they basically hit peak levels for the 4 weeks ending May 15th of this year, when the median sold price was $1.6 million, up 19% compared to a year ago. But ever since then, it's been on a declining trend here because right now the median sold price is only up 5%. So they basically went from up 19% year over year, and 1.5 months later, only up 5%. Okay, that's my analysis regarding the San Jose, California housing market. Let's have a look at Sacramento though, because it says here in Redfin's report here that after San Jose, Sacramento is cooling the fastest. So in Sacramento, we're not seeing this giant increase of new listings either, much like in San Jose, California as well. So in Sacramento, the number of new listings is actually down 10.6% from last year, and also below 2019's levels as well. So fewer houses being listed for sale in Sacramento, California. Let's have a look at active inventory. Take a look at that. Active listings in Sacramento are up 28.77% from 2021. I mean, far higher than last year's levels, still below 2019's levels. But despite that, have a look at this, because the number of price reductions has been surging ahead. So even though we have less inventory now compared to 2019, far less than 2019, we have far more price reductions. So right now the share of price reductions is 11.5%. Compare that to 2019, it was basically half that at 6.5. And then 2021, we had approximately 4.5%. So basically right now we have approximately almost 3 times more price reductions compared to 2021. But check this out, even though we have approximately 28% more houses listed for sale right now, we have less pending home sales. So pending home sales are down 29% from 1 year ago, which is absolutely insane because we have far more houses listed for sale, but pending home sales have declined greatly, and that's why we're seeing a huge increase of housing supply right now. And just like San Jose, even though we're seeing a huge amount of price reductions, the median asking price is not declining. Take a look at this. So the median asking price in Sacramento right now is just under $612,000, a 12.2% increase from 1 year ago. However, what has been going down in Sacramento is the median sold price. So the median sold price is actually only up 6% compared to a year ago, whereas the peak was really in May of this year when we had a 12% year-over-year gain. And now that year-over-year gain is basically half that number, only at 6% right now. Also, what I'm personally seeing in Sacramento as well, a lot of open house signs, a lot of emails from real estate agents with new listings. I mean, over the past couple of years, I barely got any emails from real estate agents saying that they have a new listing in the market because on average in Sacramento about a year ago, home sellers were getting about 6 offers on their houses on average. And now, because of a pullback of home buying demand, a lot more houses listed for sale. A lot of real estate agents have to go back to their marketing that they once used back in 2019 and 2018 in order to attract a home buyer. So I'm getting a lot more emails from real estate agents. I'm seeing a lot of open house signs. I'm also seeing riders across for sale signs that they have price reductions. On top of that, I'm getting a lot of texts, phone calls, and emails from loan officers looking to get new business. And again, this is a big difference compared to 1 year ago when our housing market was in full swing. All right, so going back to Redfin's report here, it says, of course, sky-high home prices are yet another factor pricing out home buyers right now. This is because Oakland, San Jose, and San Francisco, for example, typically have houses selling for over $1 million and often for well over $1.5 million. Obviously, this is not a huge surprise because these markets here are the most expensive markets in the United States right now. And speaking of that, have a look at this because this is according to the California Association of Realtors, the most recent stats we have from them, which was published for May of this year. So take a look at this. In the San Francisco Bay Area, the median sold price was $1.5 million. This is the median sold price for a single family home in the San Francisco Bay Area. But have a look at the Central Valley. The median sold price as of May was only $500,000. So in other words, the Bay Area home prices are about 3 times more expensive than the Central Valley. And here are the main counties within the San Francisco Bay Area as well. So take a look at these prices here. Alameda County, which is in the East Bay, $1.5 million. Marin County, $2.1 million. By the way, these are median sold prices in these counties here. Napa, just over $1 million. San Francisco, just over $2 million. And San Mateo County, $2.2 million. And in Santa Clara, almost surpassing $2 million as well. And here's something that Redfin notes regarding rising mortgage rates and how that impacts California homebuyers. I often talk about the median sold price in the nation of approximately $400,000 and how rising mortgage rates impact the average homebuyer across the United States. But have a look at this because this is pretty astonishing. It says the typical monthly mortgage payment on a $1 million home is roughly $5,750 per month with a 6% interest rate. By the way, this is only principal and interest only. It excludes property taxes and insurance. And this is $1,400 higher than it would be with a 3% interest rate, assuming a 20% down payment. So in other words, because mortgage rates increase from 3% to approximately 6%, for people buying a $1 million home, that's going to cost them $1,400 more per month. And this increase is half as big with a home price close to the national median average. So the typical monthly payment on a $450,000 home, again, that's the approximate median sold price across the nation here, is about $2,600 more per month at a 6% rate, about $700 higher than with a 3% rate. So if you're looking to buy a $1 million house right now, that's going to be approximately $700 more per month than the average price home in America right now. And this real estate agent who's based in the San Francisco area stated the following here. Would-be buyers are shying away because they simply have less money, both for down payments and monthly payments. More than half of the buyers I see in San Francisco are tech workers, and many of them have seen their employers' stock prices tumble over the past few months. Of course, we have inflation, high home prices, and increased mortgage rates as well. And Redfin actually made a really good point regarding the Sacramento real estate market here as well. They say Sacramento, which of course is located about 90 miles east of San Francisco, is also one of the fastest cooling markets. That marks a reversal from the height of this pandemic when it attracted scores of remote workers moving in from the Bay Area and other expensive parts of this country. But partly because of this popularity, home prices soared 44% throughout this pandemic, reaching a median high home price of $610,000 in May 2022 and pricing many buyers out of this market. I couldn't agree more with them regarding this because a lot of people moved here because of our affordability. I think approximately 2 years ago, our median sold price was in the 400s. Now we're at $610,000. So a lot of people were moving here because of work at home arrangements, especially from the Bay Area. We helped a lot of people move from the San Francisco Bay Area last year due to work at home arrangements and of course because of our housing affordability here. A lot of people were moving from their studio apartments in San Francisco where they're paying $3,000 to $5,000 per month, and they're buying nice houses in Sacramento with a nice backyard and a pool, and basically having the same housing payment, if not less. Redfin also is noting that pandemic boom towns are also seeing the biggest cool down in their housing market here, because they say that Seattle, which was number 4 on their list, Boise, Idaho, Denver, San Diego, and Tacoma, Washington round out the list of the top 10 housing markets that have cooled the most so far this year. Cape Coral, Florida, Las Vegas, Austin, Phoenix, and Northport, Florida, all popular migration destinations during this pandemic, are among the top 20 markets cooling the fastest. And it says here the influx of out-of-towners, along with a limited supply of houses for sale, caused home prices in those places to rise rapidly, sending them from affordable to not so affordable. Boise home prices increased 53% from May 2020 to May 2022. Also in Tacoma, Washington, home prices increased 47%. And here's a key point here, because higher home prices, the pandemic tapering off, and some workers returning to the office are causing their popularity to wane. So here are the US housing markets that are cooling off the fastest as of May 2022. Number 1 again, San Jose. Number 2, Sacramento. That was followed by Oakland, California, Tacoma, Washington, Stockton, Boise, Denver, Colorado, San Diego, Tacoma, Washington, and San Francisco, and also these other cities rounding out the top 20. And by the way, if you're curious here, here's the median sold price. This is the change in price per square foot compared to a year ago. Here's a change in housing inventory, change in price reductions, change in pending home sales, and of course the change in the sale to list price ratio. Of course, this is a ratio of houses that are selling for over the asking price. So let's have a look at the change in price drops compared to 1 year ago. So Boise, Idaho led the pack at 41%. So 41% of active listings in Boise have price reductions. In Sacramento, 24%. Denver, Colorado, 20%. Also Stockton, California, 19.4%. Let's also sort this by the change in pending home sales. So the biggest decrease in pendings is actually in Boise. Look at that. Even though they're down 15.9% of housing supply, they're seeing 41% of price reductions and a big decrease of 39% in pending home sales there. This is by far the biggest decrease in contracts signed in these 20 markets here, but also in San Jose, decreasing by 21% from a year ago. All right, in stark contrast, here are the markets that are cooling off the slowest across the nation here. So according to Redfin here, Albany, New York has cooled slower than any other metro this year. That's followed by El Paso, Texas, Bridgeport, Connecticut, Lake County, Illinois, Rochester, New York, and New Brunswick, New Jersey, Cincinnati, Akron, Ohio, New Haven, Connecticut, and Virginia Beach, Virginia, rounding out the top 10 markets that have cooled the slowest. And keywords here, no market is heating up across the United States. In other words, according to this article here, for the metros they look at, again, the top 100 largest metros across the United States, no market is heating up right now. And by the way, the 10 metros that are cooling the slowest are almost all located in the Northeast or the Midwest, and they're all relatively affordable. 8 of them have a median sold price below the national level of $431,000. So here are the top 10 metros that are cooling the slowest as of May 2022. So again, Albany, New York is leading the pack, followed by El Paso, Texas, and all these other cities here across the United States here. So have a look at this. This is pretty interesting. I'm actually going to look at Albany, New York right now. And this is on Redfin's website here as well. If you actually Google Redfin housing market data, it takes you to this website right here. So in Albany, New York, the number of new listings is actually down almost 11% from a year ago. And let's have a look at active listing inventory or active listings. Active listings in Albany are still down compared to last year and also especially compared to 2019. So active inventory is actually down 23% compared to 1 year ago, which is pretty astonishing because some pretty big differences when you look at Sacramento, San Jose, and San Francisco, for example. So housing inventory is down approximately 23% in Albany, New York. So let's have a look at pending home sales. Again, this is when a contract is signed between a home buyer and home seller. So pending home sales in Albany, New York are actually up almost 17% from a year ago. So interesting to see that active listings are down from a year ago, yet contracts signed are actually up from a year ago. So in other words, they have fewer houses listed for sale, but contracts signed are increasing. I'm guessing price reductions are also very low as well. Price drops, yeah, look at that. Actually down compared to 2019. The share of price reductions is only 5.1%. Compare that to a year ago, it was only 4.2%. And home prices in Albany are actually holding fairly steady as well. So as of January 1st of this year, the median sold price, which was $265,000, was up 11% year over year. Now it's also up 11% year over year for the most recent stats we have right now. And over the past few weeks here, it also has been increasing at a faster pace or a faster clip because as of June 5th, it only increased 6% year over year. Home prices in Albany have also been increasing at a faster clip over the past few weeks here as well. So for the 4 weeks ending June 5th, home prices were up only 6%. Now they're up 11%. With that said, thank you so much for watching today's video. If you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.